Back in 2008, the entire housing market collapsed. And this wasn't because people stopped buying houses. In fact, during the crisis, people were still buying houses like crazy. The problem was they weren't able to get a mortgage. Lenders pulled back because suddenly they didn't think that these people were. So how did we go from everybody can get a mortgage to nobody can get a mortgage? Well, let's find out. All right. Now, before we start, I want to say a special thank you to our supporters. Without you guys, this would be impossible. So, thank you. Also, if you aren't a supporter, but you want to support us, just subscribe, like, and share. Anyway, let's begin. The first type of loan that we need to talk about is called a loan liar. Now, this isn't the official name, but it makes sense. A loan liar is basically a loan where the borrower lies about their income. Now, normally when you apply for a mortgage, lenders want to see proof of income. They want to make sure that you actually make enough money to pay them back. But a loan liar is when borrowers lie about how much money they make so they can qualify for a larger loan. For example, imagine you wanted to buy a house for $400,000. You put 10 down. That's $40,000. If you have an income of $60,000 a year, lenders will probably approve your loan because they believe that you can afford to pay it back. However, if you tell them that you actually make $100,000 a year, all of a sudden they'll approve you for a bigger loan. Maybe they'll let you borrow $600,000 instead. So really, with a loan liar, the borrower is lying about how much money they make so they can qualify for a larger loan than they would normally get. But why would lenders fall for this? Well, it's because they had a little help from the government. You see, back in 2008, the government wanted home ownership to be more accessible for everyone. So they created a program called the Federal Housing Finance Agency. The Federal Housing Finance Agency, or FINA, made it easier for people to get mortgaged. Specifically, they lowered the standards for borrowers. This meant that people could qualify for larger loans, even if they couldn't afford them. This sounds good on paper, but in reality, it just encouraged people to lie about their income so they could get an even bigger loan. With the help of loan liars became very popular. It seemed like everybody was lying about their income, and this caused a huge problem. When people started defaulting on their loans, lenders realized that many of these borrowers never could have afforded these loans in the first place. That's why they started cracking down on loan liars. They began requesting tax returns, pay stubs, and bank statements from every applicant. Suddenly, it was a lot harder to qualify for a loan, especially if you had lied about your income. Of course, this made some people panic. If they couldn't qualify for a loan, then they might not be able to buy their dream home, and that's exactly what happened next. But wait, there's more. There was another type of loan that was even more risky. These were called ninja loans. Ninja loans are loans where the borrower doesn't have to make any payments for a set period of time. Typically, these loans are adjustable rate mortgages, meaning that the interest rate will change over time. At first, the interest rate will be very low, but after a few years, it will jump up significantly. With a ninja loan, you don't have to make any payments during this period. This sounds great, right? Well, yes, it does sound great. But it's only great if you plan on selling the house before the interest rate goes up. Otherwise, you'll be stuck with a huge mortgage payment that you might not be able to afford. But that's the risk that people were willing to take. Thanks to Fannie Mae, it was easy to get ninja loans. In fact, it was so easy that many people took out multiple ninja loans on multiple houses. They hoped that the housing market would continue going up, so they could sell their houses for a profit. However, when the housing market collapsed, people were forced to sell their houses at a loss, and this is what caused the 2008 financial crisis. Banks were left with tons of bad debt, and they didn't know what to do with it. Some of them tried to pass the debt on to other banks, but no one was buying it. So eventually, these bad debts had to be written off, and this caused the banks to go bankrupt. This is what caused the 2008 financial crisis. But anyway, that's how the financial industry ruined the housing market. If you like this video, check out the series. And if you like that, check out the series. Also, if you want to support us, subscribe, like, and share. Thank you guys so much for watching. We'll see you next time.